Ladies and gentlemen, it is the Wonder Kid here. I hope you're all having a fantastic day. A warm welcome to this video. And guys, in today's video, I'm going to be explaining the daily bias as the ICT concept, okay? Now, when it comes to the daily bias, it is very instrumental to understand what price is doing first beforehand. Why is price presenting in the way it is before we actually go on to explain the daily bias and understand it. It is something that can elude quite a lot of people, so I hope today's video can clear it up for you. But again, I'm going to make this video as concise as possible. But guys, do listen in to everything I say and try and go into the charts and see for yourself why price is delivering in the way it is. Okay, so why are we focusing on the daily time frame when it comes to the daily bias? We do know ICT does like to look at daily bias in particular. But ultimately, what we're saying is that with this, even the 2022 mentorship in itself, we're using the daily bias because we are framing our trades from the daily down, okay? But the key point number one is to understand that the higher the time frame, the higher the weight it has on price and a potential trade in the subsequent lower time frames, okay? So say, for example, the monthly time frame will have a higher bearing than the weekly time frame. The weekly time frame will have a higher bearing than the daily time frame, okay? So say, for example, you have a daily bias that is bullish, and then subsequent price action beneath in lower time frames are giving you signals that price is going to be bullish or is bullish, then of course then you'd look to go long. Okay, so again, the whole idea of daily bias in particular is so that we understand where price is more likely to go in the day ahead, and we look for potential setups in the subsequent lower time frames. Okay, usually it's the 1 hour to the 15-minute to the 5-minute and 5 minutes to the 1 minute for execution. But again, like I said, that is the typical kind of 2022 ICT YouTube mentorship. But again, in today's video, we're going to be understanding daily bias. Okay, so guys, let's go straight into it and listen very carefully to what I'm going to say. Feel free to write down notes. But again, I want to explain to you why price is delivering in the way it is. Okay, so price is being offered, okay, and it is either being delivered or re-delivered. Okay, now the whole premise of why price is moving in the way it does is two things. Price is either reaching for liquidity or an imbalance. Okay, so for those of you that don't know what an imbalance is, it's simply when we have a gap between one candle to the third candle. So say, for example, over here we've got candle number one, candle number two, candle number three. We can see the low of candle number one to the high of candle number three. There is a gap, and that is an imbalance. Okay, so understanding that price is either reaching for liquidity or coming back to fill an imbalance is the reason why price is moving, all within the premise of premium and discount. Okay, so guys, this is very key to understand. Price is either reaching for liquidity or an imbalance within the premise of premium and discount. Okay, and this is where we start to form our daily bias. Okay, so guys, we're going to just do a little bit of chart reading here. I've got the daily chart of the S&P 500 E-mini futures up, and guys, what can we see here? So you guys can clearly see that we'll start off here. We can see that we've had this very bearish down move. We took out this liquidity and we showed that willingness to continue further. Then what happened after this? You guys can see we wicked and we had a very bullish candle up. Okay, now after this day we can say, okay, well, if price is either going to be reaching for liquidity or an imbalance. After this bullish move, where is the liquidity and imbalance? So I'm actually going to just do a few notations. I want to just mark this out as sell side liquidity, mark this out up here as buy side liquidity. Again, I'm not going to be talking about swings and premium and discount too much in this video. Again, this is just to understand daily bias. You guys can see price had this bearish move down. Like we said, on this day we saw a very bullish reaction. So where do we think price is going to reach? Either liquidity, it's already taken sell side over here, so it's either going to reach for the next thing. We see buy side liquidity is up here and we've got an imbalance here. Now, like I said earlier, you can have an imbalance like this, okay, where we've got a very clear gap within the candle, or we can have an actual volume imbalance here. So you guys can see this is a form of imbalance. Again, I'm not going to explain too much about imbalances. There are different types. But again, you can see what has happened here. We can see we've got a very bullish candle up. We can say for the next 2 to 3 days that our bias is going to be bullish. Why? Because again, we've taken sell side liquidity here. If we had sell side here, that was how it was previously. Price took sell side and then it started to show a bullish reaction up. So it's reasonable to expect, potentially expect, price to come back into premium and into a volume imbalance here. Okay, so you guys, you can see that's what happened. Price came up, reached there, and once it refilled that imbalance, where is it reaching? You guys can see this very, very strong bearish candle down. After this day, what can we say? Well, we've come up into premium in a swing leg, and for those that know what premium discount is, I'm actually just going to put up the tool. So guys, here you can see, here's the tool. So guys, we came up above the 50% level. We've come up into a volume imbalance. So now where is price more likely to go? Well, after this day, you can see we had a very, very bearish candle. A lot of selling, okay? We can see a very, very bearish candle. Price was re-delivered to this area, and you see this sell-off, okay? Now, after this day, what is our bias? Well, the next area where price is most likely to reach for is the sell side liquidity. Well, why? Because here we've had a bunch of buying happening, okay? We can have, imagine stops down here. Price came up, was re-delivered at this volume imbalance. You see this very strong bearish candle down. So of course, our bias for this day can be expected to be bearish. Now, for those of you that understand the power of three concept, you guys can see price came up, came down, and then finished there, okay? So again, you could have had a potential short on this day, okay? But I'm not going to go too much into that. Again, this is what I mean by daily bias. So we could expect after this candle, the next day to have a bullish bias. Again, you can see candle 1 and candle 2. We're going to have a bullish bias on these 2 days. Why? Because of this volume imbalance. Once price came in and reached it, we had a very, very bearish candle. A lot of selling. We can see now price is trying to reach what? Again, like I said, either an imbalance or liquidity. We've already filled in or tapped into an imbalance in premium. So price is going to search for sell side liquidity. So again, that's what has happened here, okay? So guys, we're going to continue and give you some more examples of this, okay? So now we understand after this candle price, you guys can see price has spiked into the sell side liquidity and closed above it, okay? And the next day you can see we have a bullish candle, okay? Now, after we have swept sell side liquidity, we can imagine that smart money is buying down here. So if they're buying down here, they're going to need to either, well, price is either going to look for, like I said, an imbalance or liquidity. After this candle, where would the buy side liquidity be? Okay, and in fact, I'm just going to bar replay this just to make it a little bit clearer. So let's see if I can just get the bar replay tool on just to make it a little bit clearer. So there you have it, guys. So guys, as you can see, we've came down, we've spiked the sell side liquidity. Buy side liquidity will be up here now. You can see that we've had an imbalance. Okay, so where is price most likely to be on the next day? Or what bias is price more likely to exhibit? What bias can we have? Well, we can potentially expect a bullish bias. Why? To either come back into this fair value gap or this imbalance. Okay, this is an imbalance here, and trying to reach for buy side liquidity at the very least. Okay, well, at the very least, look for this volume imbalance, and if price does have enough, it will reach for the buy side liquidity. So again, on the next day, we will look or have a bullish bias. As you guys saw, price came up in a bullish way, and then again you can see after it filled in, we had this kind of move down, price staggered here, and then we had a very bullish candle up. Even here on the next day, you guys can see this imbalance was filled, but again you guys can see how much price is trying to push up, and we've closed beyond it. So it's reasonable to expect even after this day, this candle closed, the next day, what is our bias going to be? Well, we've already filled in this imbalance. So like I said, price is either searching for imbalance or is searching for liquidity. So where is liquidity? Buy side. Okay, so price can have a bullish bias because price is more likely to reach for buy side liquidity on the next day. So let's see what happened. Exactly what happened. So again, we can have a bullish bias on this day. Now, don't forget, guys, I'm actually just going to close the bar replay tool for now. Don't forget the bias. Just because we have a bullish bias here, okay, can mean in the lower time frames we can look for a bullish move, okay? Why is that? Well, we know because if on the daily we can expect buy side liquidity to be taken, we understand that, okay, there is a draw on price towards buy side liquidity, right? So as this day begins, if we look for a setup to go long that fits the plan, we can expect price to reach buy side liquidity. We can take potential partials on the way. But the whole premise of this is to understand where price is to potentially or is looking to go towards. That should be how the trades should be framed. Where is price reaching for? Where is the draw on liquidity or the draw on price? Once we know the draw on price, not only are you more comfortable in entering a trade, but you can actually hold it for longer and have potential more R. But again, like I said, the whole premise is to understand where price is reaching for, not to just have a trade entry criteria, enter, and just see what happens with price. If we understand the draw of price, we can understand where it is more likely to go. So anyway, guys, you can see, let's continue, just a few more examples. Price swept up this buy side liquidity and we staggered. We had a few days of consolidation. So sell side liquidity is down here. Okay, I'm just going to get rid of this. After buy side has been swept, where is price more likely to go? You guys can see over here. Okay, some of you guys might think, okay, well, we've come up, we've swept buy side and we've got stagnation. This is consolidation. This is time to actually be careful and wait for price to show its hand. Okay, of course, you can potentially have a bullish bias. You could say, okay, well, in the larger swing, price was up, buy side liquidity is up here. There is liquidity sitting here. So price could come up. But again, we want to wait for price to show its hand. So this is where we get very, very important, okay? Because you guys can see price did not move. On this day, I can imagine traders, even traders watching this, they'll be like, what is the daily bias? What is the daily bias? So that I know where I can trade today. This is the next most important thing I want to let you guys know, is that everyday bias is unrealistic. You are not going to have a bias clear on each and every day, okay? That has to be understood. Like I said, even here, we can say that, okay, price came down here. We can say that, okay, well now, price, we have a swing. A swing is between this bearish candle and up to the very high here, okay? Once we had this bearish candle here, we could potentially say, well, price could potentially, we could have a bearish bias because we want to come back into discount and fill in this imbalance here. And I'll just draw that out for you guys. Okay. So again, on this candle, after the next day of this candle, so on this candle, we could say, okay, well, we hold a bearish bias. And you can see price was bullish. So you may have taken a loss on that day. Doesn't mean that, hey, everything's incorrect. It just means that price started to consolidate. Okay, so you guys can see price started to consolidate. So like I said, everyday bias is unrealistic. Okay, that is number one important point to understand. It is very, very important to look at and identify imbalances in the price delivery. Okay, so like I said, understand where buy side and sell side liquidity sit and understand where the imbalances reside. Okay, so guys, I'm just going to do a few more examples on this chart to see if we can find anything else. You guys can see what happened here. Price consolidated, came back down in a very bearish manner. You guys can see even after this day, you could have had a potential bearish bias if you understood that, okay, well, we've got a large sell off here. We can see prices looking to seek sell side liquidity because again, we've had a raid of buy side. What is happening here? Well, we have buy stops that are being triggered. Smart money is selling to pair those orders up. If smart money is selling here, they need to buy back down here below sell side. Okay, so again, this is what is happening. So again, we have consolidation here, price start to move down. On this day, again, we could have had a bearish bias. Again, why? Because we've seen this aggressive move down. Even on this day, if you didn't have a bearish bias, and you could have said, okay, well, price has come back into this imbalance over here, so we don't know what is going to happen next. So like I said, price has come back into this imbalance over here in this day. Price could easily just come up, okay? And we could see a bullish move. So again, maybe on the next day, we did not get a clear bias. So we're going to say, okay, today the bias is unclear. We are not, either we're not going to trade or we're going to wait for a news driver or see what happens today. You guys can see we had another bullish move down. So now we can have a little bit more confidence in saying, well, price has already reached for in this imbalance. So it's either reaching for imbalance or liquidity. So now we've gone past the imbalance. Which liquidity is it going to seek to take? Well, it's going to seek to take sell side liquidity below this low. And you can see price came, smashed through it. So on this day, you could have had a bearish bias, look for shorts and held your trade at least till sell side was swept. Okay. So guys, what can you see happening next? Okay. This is going to be another example that is very, very good. You guys can see that we've got sell side here now after this day. We've got buy side up here. Okay, you guys can see, just think about it logically. Okay, so you guys can see from bar replay from here, you guys can see we've got an imbalance here. Price has come down quite heavily. We've swept sell side and we've had this move up. Now again, it's not a very strong move up. We can see we've got a wick to the upside, but ultimately price can do one of two things. Again, this is a day for me personally, I would not have held a bias for the next day. Why? Because we've got an imbalance here. Okay, so again, we could have had a potential bullish bias, but also price can sometimes come back and sweep sell side liquidity. So we either going to have no bias and look for what's happening in the lower time frames, or wait for a news driver. So this is a scenario where, for me personally, I would not have held a bias. Yes, we've got an imbalance. Yes, we stepped sell side liquidity. You could have chosen to have a bullish bias, but sometimes I'm not seeing that much commitment up. You guys see we've got a wick to the upside, so we can see what will happen next. So on the next candle, you guys can see we've swept sell side. Okay, so now sell side is swept. We can see where would buy side be. The next buy side, at least to pair up these orders, would be above here. Okay, so we swept sell side. Okay, we can have a potential bullish bias on the next day if price in the lower time frames shows its hand. Okay, or price can continue to melt. Okay, so again, it's up to you what you can read. Again, like I said, I've read it in a certain way here. We can see a wick to the upside. We've had a strong sell off. What is the next candle? You guys can see we stagnated here. Okay, so price can either, like I said, continue to push down or come up and seek buy side liquidity. So again, you could have had a day today, on that day, where you would not have a bias. Okay, and as you saw afterwards, price came up and swept buy side. Okay, and price not only swept buy side, but it reached for this volume imbalance. Okay, so I will actually just take this off. So guys, we can see that's what happened here. So just a quick read through in terms of what happened with daily bias over here. You guys can see price came up, again, fill this volume imbalance, and then price continued to come up. You guys can see even in this swing leg here, for example, what is price doing? You've got some buy side liquidity here below this bearish candle. Okay, so sell side liquidity. And then also you can have buy side liquidity above here. What is price done? Price has come up, swept the previous buy side liquidity over here. Okay, because again, price was sitting here, price consolidated, it swept sell side liquidity. You guys can see price came down, came into this imbalance. Okay, like I said, price is either reaching for imbalance or looking for liquidity, and then price started to shoot up. Okay, so guys, you guys can see price came up, swept this higher time frame, longer time frame buy side liquidity. Okay, came up here, and then we had a shift in market structure over here. Okay, so like I said, there's many examples you can read on the S&P 500 and different pairs. Again, S&P I find is very clear, but ultimately to understand how to derive the daily bias, understand number one, that price is either reaching for liquidity or imbalance within the premise of premium and discount. Okay, like we said here, price came down here, price came up into premium, filled in this imbalance, and then had a big sell-off. Okay, so we could have a bearish bias here. Okay, now one of the important things, like I said, is to understand is that having a bias every day is unrealistic, because sometimes it is just not clear where price will like to go. Okay, say for example, in this example I gave over here where we swept buy side liquidity with this price here, you can see after this day and this day, we don't know where price would go. Why? Well, if we look at it, if we were in that time frame, let's cut it back to here. We've swept buy side, okay? So we can say, okay, potentially we have a bearish bias, okay? Why? Because we can fill in an imbalance down here. So on the next day, we can look for shorts. Or price may just want to come up to this other imbalance. Again, it's still within premium of this whole swing leg, as you guys can see, this swing leg down, okay? And I'll actually just draw an arrow just to show you guys, make it clearer. So you guys can see that's the swing leg down, prices come up into premium. So again, the next day, so this day here, we wouldn't hold a bias. Why? Well, price is either going to reach up or it's going to reach down. There's reasons for both sides. We don't know. So this is a good idea to either wait for the news to show its hand or look in the lower time frames to see if price can give you a tip off. Okay, so that's a reason why everyday bias is unrealistic. Okay, so guys, I hope that was clear. Like I said, when it comes to the daily bias, I can understand the need for traders to be like, okay, what is the daily bias? Because if I have a daily bias, great, I can trade the lower time frames and find a trade. But understand that as much as even I would like it to be, daily bias, having a bias on the daily every day is unrealistic. Okay, we just have to read what price is saying and understand where is price potentially likely to go. Okay, so guys, just one last example. I'm really enjoying just finding examples. You saw this swing leg down most recently. Price came up, filled in another imbalance here. You guys can see that this is a volume imbalance, and then we had a sell off and swept sell side liquidity down here. Okay, so like I said, keep that in mind, guys. When you are finding daily bias, okay, I know I'm reiterating it, but I'm reiterating it just to make it so clear with you guys, is number one, think about where liquidity lies, and number two, think about where imbalances are lying, and number three, think about, are we in premium and discount? Okay, those are the three main questions that will help you to frame daily bias. Okay, and once you have a daily bias, like I said, on this day, once we filled in this gap, you can see we had a bearish candle here. When we can have a bearish bias on the next day for this candle, then we can see what other ICT concepts we can align to look for the short. Okay, because if we've got a bearish bias, a confirmed bearish bias, then of course, why not look for the short and understand where is the drawn liquidity? So on this day, if we look to enter here, anyone knows the power of three, you guys can see we had a power of three move here. You can look to go short here, and where would you potentially take partials? Somewhere in the lower time frames, and you can potentially look for price to sweep the sell side liquidity, because we are looking for price to target that area. Okay, so guys, I hope you enjoyed this video. I hope the daily bias did become quite clear. Yes, daily bias, everyday bias is unrealistic. Okay, you can look at the weekly time frame to see what the potential daily move is. Again, the higher the time frame, the more weight it has. Identify liquidity and imbalances, and if we are in premium and discount, and that will help to formulate where price is more likely to go on the daily time frame. Okay, so guys, I hope you did enjoy this video. Feel free to give it a like or comment on this video down below. Again, I'm more than happy to do these, but for now, I do hope you find value in this. Take care, guys, and peace.